So perhaps we're gonna have some more indecision until the earnings come, and then we gap up with some strong volume. I think that would be a good entry sign. What's good, YouTube? Ovidio here. Welcome to Stockbites number 2. Today I'm going to have a look into a fast-growing industry, the one of electric vehicles. More precisely, the one of batteries. If you are curious if the electric battery company Microvast would be a good suit for your portfolio, in this video I will describe the company in detail so you can have a comprehensive image of the business. Moreover, I will share what I think would be a good entry point in case you don't have any exposure to this company. Great, let's get straight into it. Alright guys, so today I'm going to be describing battery company Microvast and why I think it can support the global trend of electrification. First of all, I'm going to start with the executive summary. So Microvast is a leading battery technology company founded in China in 2006, and it integrated its first ultra-fast charging batteries into the public transit in 2010. During this period, since 2010 to 2021, it delivered over 28,000 battery systems that are actually operating today. Their first market was the commercial electric vehicle market, but its technology is also fully suitable for passenger vehicles. Next, I'm gonna go to the investment thesis, which basically means 3 reasons why I think the company can be a good investment for the long term. First of all, it is a fully vertically integrated battery producer, which offers highly customized solutions with short production cycle and solid margins. It has a huge total addressable market, more precisely being focused right now on the commercial vehicle side. And the third one is a field-proven proprietary technology across the entire battery system, and I'm going to be detailing this a little later. I'm going to have a look at the company overview right now. So we're going to start with the product overview. The first one is the lithium-ion battery, which is basically the most utilized type of electric battery in the world as of today. It has been applied for transportation vehicles like scooters and even cars in the last couple of years, and it is the battery used for some of the best electric vehicles in the world. And there are 4 reasons why the lithium-ion battery has become so dominant. The first one is its safety. So it is the most energy dense in use, and it has some good safe features. The second one is energy density, which is basically the measure of how much energy a battery can store relative to its weight. And it is typically presented in watt hours per kilogram. A watt hour is a measure of electrical energy that is equivalent to the consumption of 1 watt for 1 hour. A high energy density will deliver the same amount of energy but in a smaller footprint compared to a battery with lower energy density, resulting in more potential applications. So basically, how much energy can it store into the same amount of weight. The third one is a fast charging. So batteries can now take between 15 and 45 minutes for a full charge. And the last one is a long life cycle. The cycle represents the number of times the battery can be charged and discharged over its lifetime. Nowadays, electric vehicles require a significant storage capability, and so the cells have been organized in modules and then in packs. A pack contains a number of modules which contains many cells. So for instance, Tesla Model S has around 7,000 cells that are organized in 16 modules. And here we have a image that describes the way in which battery cells are stored in modules and then packs. And we have also the advanced battery components that we're going to describe a little bit later. This is a photo from the investor presentation. Going further on a cell level, every battery has 4 components. It has 2 electrodes, a separator, and an electrolyte to move charges between the electrodes. So we have here a quick scheme to show us basically how it is charged and discharged, how battery is charged and discharged. We have basically 4 elements. We have the cathode, the electrolyte, the separator, and the anode. So we have the cathode and the anode, which are the most important pieces. The anode, which is the negative electrode in the cell, the cathode, the electrolyte, and the separator. I am pretty sure I'm not pronouncing this well, but it is what it is. I'm doing my best here. Alright, so far we established that we have battery cells, modules, packs, and advanced battery components, which are a very important piece of the Microvast puzzle. Going forward, we have a proprietary technology that Microvast has developed in order to offer battery solutions for its customers. And we have here the most important battery elements that Microvast has created. We have the gradient cathode, which enables the precise distribution of elements like cobalt across the cathode particles and boosts energy density and reduces cost. We have the non-flammable electrolyte and the aramid separator, which offers a higher thermal stability, twice the temperature resistance of traditional separators, enhancing safety and the charging time. A very important aspect of the company is that it is very vertically integrated, and this means that it tries to create basically all the elements needed in-house. So they're trying to keep the number of suppliers as low as possible, and they're trying to create most of their elements in-house, from its own battery components to its cells that are later grouped into modules and packs. Its vertically integrated supply chain allows the company to provide highly customized battery solutions, while at the same time shortening the time required for a production cycle, compared with a scenario where multiple vendors are involved, and hence sometimes periods are wasted. Product portfolio. This is a very important aspect for Microvast because it has a vast portfolio, and it can offer many solutions for many customers. It offers a full spectrum of batteries, but before going into that, I need to just clarify a little bit. The passenger vehicles are the passenger cars or taxis, and the commercial vehicles are basically trucks, vans, buses, or other heavy-duty trucks. The first battery that Microvast provides its customers with is the LTO, the lithium titanate, ultra fast charging, around 10 minutes, and it has a ultra long life cycle. It was introduced in 2011 for buses and mining trucks. It has only one drawback. It is its low energy density, which basically means it will probably be it will have a high volume. Alright, the next one is the LFP, the lithium ferrophosphate. It has a low cost with good life cycle. It is used primarily for heavy equipment and industrial environments because of their ability to withstand a lot of pressure. The third one is the NMC1, which has a ultra fast charging around 15 minutes with a long life cycle. Introduced in 2017, it is used for buses and commercial vehicles because of their high energy density. The NMC1 batteries can handle larger charge currents and a greater range in temperatures than the LCO batteries. And we have the NMC2, which has the highest energy density, a fast charging around 30 minutes for a fast charge, and long life cycle. It is used in commercial and passenger vehicles since 2019, and it provides the best energy density with only 30 minutes needed for a full charge. Additionally, are used in most vehicles powered by Microvast because of their 2070 watts per kilogram energy density, which is one of the highest values across the market. And finally, we have the fifth element of Microvast's offering, which is the high energy density target cell, which will be available starting with 2022. It will bring a great energy density, more than 330 watts per kilogram, with only 45 minutes needed for a full charge. Actually, the charging time isn't that small, but still, it offers a great energy density. And this technology allowed Microvast to win the 2019 R&D 100 award for high energy density and safe battery systems for powering electric vehicles in partnership with the national laboratory. How does the business make money? That's a very important aspect, so we're going to go over it right now. For now, battery packs are the sole source of revenue for Microvast. Since it is designed primarily for commercial market, Microvast serves a wide range of both hybrid as well as fully electrical vehicles. And we have here a description: trucks, light-duty vans, buses, trains, and mining or some other specialty vehicles. The company expects to grow significantly in the passenger market vehicle, but as of now, the revenue generated from the passenger segment is no more than 5%, so it still has 90% exposure to the commercial vehicles. So as of now, the company is still a provider of commercial vehicles batteries. As of now, Microvast is supplying batteries to the largest Chinese manufacturer company after competing with the largest cell maker in the world, with CATL. We currently supply to SAIC Motor, the largest OEM in China, and in this project we competed with CATL, the largest cell maker in the world. We won by performance and by price. This is a statement that the CTO of Microvast has done during a public speaking, and I think it is a crucial aspect of the business. CATL is one of the largest battery producers in the world. It is a Chinese company, and it is basically the biggest player in the game right now. It also supplies batteries to companies like Tesla and BMW, and so competing with this company, and we won by performance and by price, which is basically a very high achievement for Microvast to compete with one of their biggest competitors and actually have some success. In terms of revenue generation, for the financial year 2020, Microvast's top 5 customers contributed 31.5% of the revenue, and we have here a revenue concentration is representative of the long sales cycle and relative small customer base in this industry. So it is an industry specific risk. It is not necessarily a risk for Microvast as a company, but for all the companies within this industry as well. It has a very long sales cycle from between 2 and 4 years, and the company signed multiple strategic partnerships right now with most notable with Oshkosh Corporation. Oshkosh builds specialty trucks, military vehicles, and trucks, and has recently won a multi-billion contract with the USPS, the United States Postal Service, to provide between 50,000 and 160,000 next-generation USPS mail trucks while using Microvast as a supplier of batteries. This has been one of the biggest successes for Microvast in terms of commercial deals. The production is expected to start in 2023 and will be for both zero-emission battery vehicles as well as for fuel-efficient, low-emission vehicles. Because, as we said before, it also offers batteries for hybrid vehicles, right? I'm guessing that electrified product will grow over time, but electrification will be a big part of the fleet that will deliver over the next 10 years, says the USPS CEO. Alright, and we have here 2 main important aspects that will influence significantly the revenue for Microvast. First, we have the trend of electrification, and the second one, we have the market strategy that Microvast will have, and basically its ability to leverage its world-class technology for establishing long-term partnerships. As having a great technology doesn't always equal great sales, so its go-to-market strategy will be very, very important for its revenue growth. We have next the existing lines of business. Microvast has been primarily using its manufacturing plant established in China, and the company is now expanding into Berlin and Houston, Texas. This is a company that was started in China, but now it is located in the US, and it has its headquarters in the US, so it has become a US company. There is a module and pack facility that will start production in Berlin in 2021, as well as a manufacturing amenity that is currently being built in the US and will actually start in 2023. This date has been revised. 2022 is not start date any longer. And increasing manufacturing capacity as of now is one of the biggest and most important things for its growth, as well as expanding their presence outside of China. Alright, we can see that the revenue from Europe is only around 23% at the end of 2020, which is a very small amount, excuse me, the highest value ever recorded. So they're growing. I mean, they're actually really growing, but still only 23% in Europe is a very small amount. And additionally, in North America is only around 0.5%, so it's basically non-existent. In terms of growth opportunities, Microvast management has made it clear that the additional source of revenue for the company is providing individual battery components to the manufacturers, original equipment manufacturer, that will produce their own batteries. So since there are a ton of companies that have stated that they would like to create their own batteries, Microvast has seen this as an opportunity to actually provide some of the components for those companies and still make a revenue out of it. Primarily, they have two elements: their aramid separator and gradient cathode, for which their technology is top-notch. They have a lot of patents, and it seems that's gonna be a real opportunity for them. This strategy seems to be an innovative way of approaching the EV market, and the company expects this source of revenue to materialize starting with 2023 for the aramid separator and only 2025 for gradient cathode. So those are some long-term plans for the company, because we are at the end of 2021, so we still have a couple of years until the company will be providing those manufacturers with battery components. And Microvast also plans into entering some other high-growing energy markets. For instance, the energy storage solution might be a potential market where Microvast estimates that it will activate by 2022. So that's a shorter time span. The company hopes to provide another type of revenue as soon as 2022. We have an industry overview here. I'm gonna go very shortly on the industry overview. If you need some more data, you can come in and just check the full article that I posted here on Substack, because the conclusion is that we have only between 3 and 4% of the new cars that are sold worldwide are electric vehicles. So there's a lot of room to grow for the company, and so yeah, we have different sources. We had the COVID-19 impact that was pretty rough on the industry, but still we have a huge compounded annual growth rate. We see here an estimate of 17.5%, and yeah, if I'll have to sum this whole paragraph, it will be that we are gonna have a huge growth in this industry. We're gonna see more and more electric vehicles and hybrid vehicles being sold, and yeah, I think the industry sits very well, and it might be a great opportunity for Microvast. So the timing seems to be perfect for the company. Alright, when we're talking about existing trends, the same thing. The cost for batteries has decreased significantly for the last decade, and we might be actually in a great point of inflection for the industry. We see here volume weight average pack and sell price split. We have here from Bloomberg, and we see how lower the cost is in 2020 as compared to 2013. So you see, only 7 years ago we have this huge increase. Like, so volume weight average pack and sell price split. So we have $458 per kilowatt hour, and now we have only 102, so only $102. So that's a major drop in price. Alright, technology developments. This is an industry where we have a lot of technology development. So technology is evolving very fast, which means that we might have some disruptors for the lithium-ion battery, as it is the case with solid-state battery. There are a ton of companies that are actually working on it. They have invested billions of dollars into this type of technology, and we'll see how it will come to market. But as of now, it seems honestly a far-fetched idea, because the company QuantumScape estimates that it will register its first revenue starting with 2024, and Solid Power will have only $2 million in 2021, $3 million in 2022, and only $4 million in 2023, which is basically almost nothing. But the good news for Microvast shareholders is that the company is also investing in the solid-state batteries. During a recent investor presentation, Microvast Chief Technology Officer has revealed that the company is currently investing in R&D for 3 major technology advancements. The first one being solid-state lithium battery. The second one is the lithium metal battery. It can have energy density of more than 1,000 watt-hour per kilogram, which is a huge amount. It is basically 3 times higher than the best battery that it offers for now. So for the 2022 battery, we have 330. Yeah, so it's 3 times higher. It would be a major breakthrough for the company. Yeah, so I think this can actually be a game changer for the company. And 3 times the energy density, wow, that would be fantastic. And also the 80 degrees Celsius high temperature cell. In terms of competition, so this industry is quite unique. So we have some of the biggest manufacturers. We have companies like Panasonic, LG, Kettle, so contemporary Ampex technology company. Those are some huge established battery manufacturers that are actually producing at scale. But at the same time, we have those innovative companies, those high-growing companies with far-fetched ideas that are also really taking the industry by storm, because they have some new ideas, and there are a lot of millions and a lot of money that are being thrown at those in order to see what developments they can achieve. Well, I'm going to focus more on the established manufacturing companies, because I think these are much more similar to Microvast than a company that has generated absolutely $0 in revenue. Cattle, Chinese company, it has partnerships with Mercedes-Benz and Volkswagen and many more vehicle companies, but seems to be a few characteristics for the vehicle batteries supplied by Kettle. When describing their passenger vehicles offering on their website, they quote an energy density of up to 215 watts per kilogram, which seems to be a little low, which is much lower compared to the batteries sold by Microvast. And on top of that, we see that Microvast has surpassed Kettle as the provider of batteries for SAIC motor, which is a good encouraging sign for the company that I've also mentioned before. We have here another company, Proterra, that has more businesses. So, for instance, it offers electric transit buses, but also provides batteries. So there are a ton of companies in the sector. So I would say that the high competition is definitely a risk when investing in one of those companies. And no matter which company you want to invest in, I think that the high level of competition is still a risk. We have the management. In terms of management, the company is being founder-led, so the company has been founded by the current CEO, which actually owns around 30% of the company, which is a pretty high amount for a CEO-led company. But one drawback that I would have for the management is that they have actually cut their first revenue estimates. So they became public at the end of 2020, the beginning of 2021, with the SPAC merger being approved in the summer of 2021. Well, actually, when the company reported earnings for the Q2, so for the second quarter of 2021, they cut their revenue guidance from 230 million to around 150 million, which is a major cut. So to sum up, I don't have enough data to really judge management, and so from the limited data that I have right now, I don't like seeing that big of a cut in terms of revenue. But still, the first half of 2021 has been a pretty interesting period for the company, and I will describe it going forward. In terms of risk, we have the global supply chain chip shortage that had malicious consequences on the earnings report for Q2. The battery technology has a very high pace of innovation. Chinese electric manufacturer NIO has already announced a new battery for its electric cars. It has a solid-state cell with an energy density of 360 watts per kilogram, which is 10% more than what Microvast offers for now. There are alternative sources of energy, hydrogen fuel cell. There's a very high competition in the sector, which may put pressure on pricing, lowering their margins. And additionally, the company is still very concentrated around the Asia Pacific area, and so the international expansion is a must for the company, but it might be pretty difficult, and it might be actually more difficult than expected. Alright, right now we're gonna go into the financial overview. It became, as I said before, it became public via a SPAC, Special Purpose Acquisition Company, reverse merger. This type of financing has been very used during the last 2 years. We see here the revenue estimates, but actually the company has a contracted revenue, so it has I think around 1 billion contracted revenue already, so it has contracts for between 1 and 1.5 billion backlog through 2027. So during those 6 years, it already has between 1 and 1.5 billion of backlog, which is they have orders, they have like purchase orders for their batteries. And here we can see, based on current business conditions, trends, and other factors, Microvast is introducing a revenue guidance of range for the fiscal year ending December 31, 2021 of 145 to 155 million, which is a major cut from what we can see here, 230, so that's not applied anymore, which will represent a year-over-year growth of around 35% to 44% compared to 2020. We see here revenue by segment. 100% of the revenue in 2021 is from commercial vehicles. Battery components won't be a source of revenue until 2023, and energy storage solutions will only represent a source of revenue since 2022. But as you can see, the highest amount will still be from commercial vehicles, which also includes 5% of passenger vehicle sales, so only around 5%. We can see here on the back of that, Microvast estimates its EBITDA to be positive in 2021 with an EBITDA of around 5%, growing from minus 11% in 2020. In terms of cash flow, the company has been cash flow positive from operating activities, so the business has been generating money in terms of operating activities solely, so nothing without the investing activities, without everything that the company has invested. We see here 30 million and 50 million for the end of 2019 and 2020. We see here the Microvast revenue by region, huge in Asia Pacific area, Europe very small, and other areas basically non-existent. And we see a good growth in Europe, so from 2019 to 2020 we see more than doubling the amount in Europe, which is a good sign for the company, although it dropped from 2018 to 2019. I detailed here a little bit for the first half of 2021, which has been a bumpy road for Microvast. The most important hurdles have been the industry-wide semiconductor shortage, which resulted in a higher manufacturing cost per unit, as well as lower volume of orders placed by their customers. Additionally, the increase in raw price materials has also had a negative impact on the business, and moreover, they have said that their US factory in Tennessee will start producing in early 2023 instead of 2022, so they have postponed this term as well. And the most significant aspect has been in the gross margin area. So if in the first half of 2020 they had a positive gross margin of around 16.7%, right now it sits at minus 16%, which is a pretty sharp decline, and having a gross margin negative, that's not good for a business, because we have here, for instance, the EBITDA margin, which is minus 69% for the first half of 2020. I think this should have been yellow here. I'm sorry, I didn't catch it. Alright, now in terms of valuation and technical, the company has around 300 million shares, not including the 40 millions from warrants, and right now it trades around $8. At this price it has a market cap of 2.8 billion, taking into account the execution of all outstanding warrants. Using the revenue for 2021, we have a price to sales of around 18.6. This is almost identical with for the last 12 months for cattle, around 19. Utilizing the revenue estimate for 2022, 230 million, companies now trading at a future price of sales around 12. And right now, the most important thing, in my opinion, is the compounded annual growth rate for the company. So I need to see how the revenue will grow and how will the company adjust the new market conditions given by the high price of raw materials, the shortage of chips. Yeah, Microvast estimates a tremendous 87% growth for the period, followed by from 2020 to 2025, followed by 24% from 2025 to 2030. But this remains to be seen. Honestly, I wouldn't put much emphasis on this 87% compound annual growth rate because we don't know actually what the company will do, and we need to wait and judge quarter by quarter instead of just believing this. Alright guys, so from a technical perspective, the trend is bearish for both a short term and long term. So I have here the chart. We have, that's when the Oshkosh corporation announced was made, and since we are on a downtrend, significant bear trend, we've seen a couple of runs and they have all been stopped by this huge gigantic trend line. And as we can see right now, we are actually consolidating around the 7.50 area, between 750 and 8. So we have been consolidating here, and this consolidation actually reminds me of this consolidation right here. So we had like a couple of days, more than a week here consolidating, and then we had a major run up. Why is this consolidation so important? Because usually an area of consolidation shows some pressure building, some indecision. Investors don't know exactly what to do, where the price is gonna go, and so these might be actually some great areas of entrance. For instance, we see here both the 100 and 200 simple moving averages are above the price, so the trend is definitely bearish. And moreover, we have a short-term resistance. We have this 825 price, 826 actually, 827, that has acted as a major resistance. So as we can see, immediately as the price hit it, it couldn't close above it, and it basically rejected the price, and so it has acted as a resistance. I would expect today is the 28th of October. I would like a close above this level. I would love a close above this level. Anyways, the trend is definitely bearish right now. If we want to start the position, we have here two major options. We have this consolidation area, which can be a good area to open a position. Instead, the company does something like this. So the company does something like this and just goes higher. You can open, for instance, here a part of a full position. So, for instance, you can open 20% of the company, of the position that you want to own. So 20 to 25%. I wouldn't open a position, a full position right now, not even if I have to have a position, because I think we need to actually report earnings. I'm pretty sure this date isn't correct, the 1st of December date isn't correct, so I think somewhere between the end of November, between the second half of November, between the 15th of November and the beginning of December, we need to report earnings. And so I think there are two main reasons why I wouldn't start the full position right now. First of all, we have this gigantic bear trend line. Second of all, the trend is absolutely bearish, and you know what they say, the trend is your friend, so you don't want to catch a falling knife, you know, because the company can very well have more problems onto Q3 and do something like this, and then that's it. We're gonna all buy it into the 6. Alright, but so far what I would say is you can open 25% of a position and wait for the Q3 earnings in order to see how the company is doing, and especially if we close above this trend line, more or so with a strong volume. If we have a strong bullish closure with some volume with it, I think that would be a good bullish sign. So for instance, you buy 25% of in here, and then you buy, let's say, it jumps here and really runs, and then you can buy some more. But also be careful, try to not buy this company after it had a major run up. So what you people need to be careful at is you don't want to buy the company after it had a major run-up. So for instance, it grew around 70% here in a couple of days. So you don't want to buy it. You can buy the pullback, you can wait for a pullback, and you can buy it then. So yeah, there's a couple of things that you need to be careful of. And yeah, just be careful out there. Alright, going back to our Substack, I see that, yeah, actually very important, this is a high growing company, it carries a high degree of risk, so please be aware that you're investing in a company that has a high degree of risk. And to conclude, the 8 idea seems like a good entry point for a long-term building, for a long-term holding, excuse me. However, the trend is bearish and you might open up only a partial position and wait for the Q3 earnings and see where the company is. To be honest, the best scenario I think would be a gap up on earnings, and especially if it's above this trend line, so perhaps we're going to have some more indecision until the earnings come, and then we gap up with some strong volume. I think that would be a good entry sign. Alright, in order to conclude, I think there are definitely many tailwinds in the electrification industry that will support Microvast in achieving its mission, as long as its go-to-market strategy will be adequate. Microvast can succeed in the long run if they double down on the technology and keep innovating in order to stay ahead of the curve. And always very, very important, remember to only invest in companies with your desired level of risk. Again, this is not financial advice. This video is only for educational purposes. And yes, so I just described you what my price point would be, what my perfect scenario would be for me. And yes, if you wanna read this entire article, you can do so on my Substack. I will put a link in the description. And please do your own due diligence. Do not buy blindly. And I hope you learned something of it today. Welcome back. That was Stockbites number 2. Please remember, this is not financial advice. These videos are only for educational purposes, and you should always invest in companies with your desired level of risk. And more importantly, you should do your own due diligence and do not rely on anyone to give you financial advice. So put in the work, find great companies and invest in those companies. And yeah, if you feel like you've learned anything of value today, or if you want to see more in-depth stock reviews, please consider subscribing. Great guys, that's it from me. Until next time, keep crushing it.